Good morning, everyone. This is Charalambos Pissouros, senior analyst at IronFX, bringing you the morning comment for the 5th of December. Italy votes no and Renzi quits. Italians have spoken and voted no to the constitutional reforms proposed by Prime Minister Matteo Renzi. The no vote won Sunday's referendum by 60% to 40%, and after the battle was lost, Renzi announced that he steps down. He signaled that he won't stay on to help stabilize a caretaker administration, which leaves President Mattarella looking for Renzi's successor. This means Italians will likely have to wait for a while before they are called to vote for their new government. At the moment, polls show that one of the prominent parties that could rise to power is the Five Star Movement, a political party that is considered anti-establishment and has in the past advocated for holding a referendum on the euro. This is a negative outcome not only for Italy's political stability and economy, but for Eurozones as a whole, as it raises fresh questions with regards to the future of the bloc. The common currency opened with a negative gap on Monday and continued to tumble during the Asian morning to hit the key psychological support zone of 105 against its US counterpart. In our view, the prevailing path in euro-dollar remains negative, but I prefer to wait for a clear close below 105 before I get confident on the resumption of the downtrend. Something like that will confirm a forthcoming lower low on the daily chart and is possible to open the way for our next support territory of 104. Now in the US, non-farm payrolls almost matched the forecast, while the unemployment rate fell to its lowest in 7 years. While some may argue that this is due to a declining participation rate, we disagree. The labor force participation dropped somewhat, but not much enough to support such a slide in the unemployment rate. So the big drop in the unemployment rate is not just discouraged people leaving the labor force, it really is people getting employed as well. Average hourly earnings fell 0.1% month over month, which was the first negative print in 2016 and the worst since 2014. The greenback traded lower following the report, perhaps due to the disappointing earnings print or because the market was just looking for something much better. Dollar-yen retreated on Friday, but hit support slightly below the 113 barrier and rebounded somewhat. The pair's path remains to the upside, and as such I would expect a clear move above the 114.65 high to initially aim for the 115 barrier and then for the next key resistance zone of 116. Overall, we believe that this jobs report confirms that the US employment sector continues to tighten and keeps the Fed on track to hike at its upcoming gathering. Indeed, market expectations remain elevated, and according to the Fed Fund futures, investors are currently pricing in a 93% chance for a December hike. As for today's events, the UK services PMI for November will be in focus. The forecast is for the index to have declined, but to remain well above the critical mark of 50. So we don't expect this to trigger a policy response from the Bank of England at its upcoming gatherings. Eurozone's final service sector PMIs for the month and the bloc's retail sales for October are also coming out. In the US, the ISM non-manufacturing PMI for November is due out and the forecast is for the index to have risen modestly. We see the risks surrounding the index are as skewed to the upside, considering that expectations over Trump's fiscal policies may have boosted business optimism somewhat. We have two speakers on today's agenda: Bank of England Governor Mark Carney and New York Fed President William Dudley. As for the rest of the week, on Tuesday during the Asian morning, the RBA decides on interest rates and expectations are for the bank to stand pat. On Wednesday, the Bank of Canada takes its turn. We don't expect officials to act at this meeting, especially given the latest gains in oil prices and the optimism in the energy market following the OPEC meeting consensus. On Thursday, the main event will be the ECB monetary policy decision. We stick to our guns and expect the bank to extend the minimum duration of its existing QE program, as well as tweak the parameters of QE regarding what the ECB can buy, so the bank doesn't run out of eligible assets to purchase before the program ends. We also get China's trade data for November. Finally, on Friday, we get more Chinese indicators, the nation's CPI and PPI data for November. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.